Hello everyone, today we're going to have a very interesting lesson. It is very quick but very practical and very effective. It is basically how to deal with market reversals. And actually, probably one of the secrets of making money in the market is being able to spot those moments of reversal that we can actually trade. Let's say that prices are moving up, and they're moving up like this, something like that, right? And then we spot this pattern where there is a top, prices retrace, and when they try to move up again, the bears are stronger and stop them from moving higher and making a high above this one. So at that point, we have a setup, but we have a very good way to spot those entries. Okay, because typically what happens with that is that another leg down will ensue. So what we're going to try to do today is to use an indicator that will help us in that precise situation in a very effective way. And here is an example of that. You can see prices are moving higher, making higher highs and higher lows, and then they retrace down, and when the bulls tried to push it back up, they could not handle it. They could not make it. So how do we know where to enter this market? So here is the trick. You're going to go into your indicators and you're going to choose the moving average, convergence, divergence, the MACD. This particular technique of MACD I didn't even include in the MACD mastery, but probably will include it in the near future. So basically, it's a different way to use MACD to trade those reversals. So here we have the typical MACD, and what we're going to do is we're going to go to the settings, and we're going to change the settings, because for this particular entry, we want to use a very specific set of settings. So we go here, and then we're going to change the fast to 3. We're going to change the slow to 10, and we're going to smooth it to 16. The rest remain the same. Then you move to style, and here you're going to get rid of the histogram, because the histogram does not help us here with anything. And what I would suggest is that you make the MACD and the signal line a little bit wider, so you can see it better, both of them. So you can see now we have a very, very clean view of the MACD. But it's a very different MACD. In fact, it's known as the MACD oscillator. It's a different setting, different way to use it. But for this particular setup, it's extremely, extremely useful. So you can see how prices made this high here, and they came down, and when they tried to go up, they couldn't do it. The MACD then went up, and the entry is precisely when the blue line penetrates the red line, okay, when the fast one penetrates the slow one, right here. So this would be your entry right there, and you can see how well it works. The same thing, the same example applies next. You can see this is a high. The next one tries to go to that, but it couldn't. So what happened? MACD went up, and when it penetrated the red line, it gave us another sell signal. Again, these are very, very, very good sell signals that you can use every time the market starts that sequence of lower highs and lower lows. And yes, how long do they last? Well, typically you want to take the reversal. You want to take the ones that are at the extreme. So in this case, you probably want to take this one. Let me show you perhaps a different example. And by the way, I'm using here a 1 hour time frame because I know most of you are trading in small time frames, but yeah, typically you can use it on a daily chart. Even weekly charts will be very effective. Here is another example where you can see that precise setup. MACD prices made a high here, they retraced, and when they tried to go high again, the MACD went above the red line, but immediately penetrated to the downside, and that gave us the sell signal. The opposite is true. So basically we are working here with this type of situations where there is a peak and then there is a retracement, and the next peak is lower than the previous one. So now we can do the same, the exact same thing, but moving down. So we have a low, right? And then there is a recovery, and the next low cannot go below the previous one. So I'm going to show you one, actually two, I believe, that I just saw on this time frame. This stock actually and time frame here is a very good example of that situation, where we see a low here and then prices recovered. When they went back down, they couldn't go below the low, and you can see what MACD did. So penetrating that red line gave us the buy signal. And you can see that the same thing is repeating now, and again the buy signal is right there. But as I said before, it's better to take the ones at the extremes, so you can continue doing the exact same setup until it doesn't work any longer. So that's your lesson for this week. This lesson is extremely beneficial. I hope you take it to heart, because these are setups that have very high percentage of efficiency. So you probably will be surprised how nice they work. And please let me know if you have any question. See you soon, and look forward to receiving your questions and your experience as well.